John Stevenson of John Stevenson and Company Capital Management joins us now. There's a lot going on in the markets. I'm going to blast you with job numbers in Canada. Let's start with that.
I think that's probably a really disappointing story. We had a flip-flop where we just saw part-time jobs basically fall off the cliff. 43,000 jobs get destroyed. And so we had a negative jobs print, and everyone was expecting 20,000 jobs created, but we had negative 9,000 jobs. So we had negative jobs. The unemployment rate goes from from expectations of 7 to 7.1. And that contrasts with the U.S., which is at 6.1. So, and been declining over time, where we've been basically stationary, or if anything, going slightly higher in terms of unemployment rate. So it's a very worrisome sign. You saw weakness pretty much across the board. Full-time job creations were 33,500, so that was relatively decent. But again, you saw massive, agriculture got particularly hit, and then manufacturing was also very weak with over 10,000 jobs lost. So it's just been very tough, I think, across the board. And I think it sort of reflects the fact that maybe, in spite of the fact that TSX has had a pretty good year thus far, perhaps not all as well in the underlying economy.
The other thing that happened it was Ontario, because there was an expectation there would be some part-time jobs, at least because there was an election and people have to work for those kinds of things. And Ontario was a real disappointing component of that compared to some of the other provinces.
Well, and I think when you string that together with what's happening in terms of the Moody's, putting them on a negative credit watch for potential downgrade, I think that all ties into the story that things are not quite as good in the heartland, so to speak, or at least what used to formerly be the economic engine of the country. That we really are struggling. The youth unemployment is still pretty high in Canada. It's definitely something that's of worry. So I think a lot of the economy isn't quite as strong, absent the resource sector. I think we're really struggling across the board, and certainly you see it manifested in Ontario.
Yeah, isn't that something? There was a publication that came out with 10 brands that you're not likely to see 10 years down the road. And there were 2 Canadian names on that list. One you would expect, the other one I wasn't. So BlackBerry was the one that I think people expect might disappear, right?
Well, there was 2. There was BlackBerry and Lululemon, and for different reasons. BlackBerry was all the strategic missteps, which have just seen their revenue plummet. That was kind of the reason they cited. I think, it's hard. That's a hard one. That's really binary, because I think right now you'd say that John Chen is doing quite a bit right, and many people think there's a possibility of turning this around. I guess it is a crowded space, and they've given up so much share to Samsung and Apple. It's really hard to see them clawing their way back. The key to that market for them is holding on to the enterprise or business customer. Whether they can make a real business out of Messenger and some of the things that they have, I'm doubtful. But I do think they probably will limp along in 10 years and still be there. But the one I'm really, don't think will go away is Lululemon. I think what they cite is all the management conflict with Chip Wilson, the founder, essentially leaving over some inappropriate comments he made, and then of course Christine Day leaving as well. And essentially the brand has struggled a little bit, but I think when you go out and see what's happening at the retail level, people like that brand quite a bit, and it's one of those places that has captured the imagination of many people, and certainly, at least if you look at my home, for example, we're chock full of the products, so I don't see that going away in 10 years' time.
I'm not coming into your house and looking at your Lululemon wears, John.
You're welcome.
Not that you wouldn't look good in yoga clothes. Do you actually wear them?
I do, and I look quite good. It's a little sheer. It's a little sheer right now, but I'm losing weight, so I actually look a little bit better in it. So that part's good. But quite frankly,
would you buy the stock though?
You know what? I think the stock in general is a bit iffy right now, and with all the uncertainty going on, I think it's probably not a bit of a risk for both these stocks. So, as an investor, I would take a pass on both of them. Right now, I think John Chen, the stock is fully valued for where it's at, BlackBerry. But in terms of
like 50%.
Yeah, and I wouldn't touch it here because I think all the possible upside is baked into it right now, and I really don't necessarily see that manifesting itself in the actual, down the road. And then in terms of Lululemon, I think there's just too much turmoil with him trying to take it public, Chip Wilson, et cetera. So I would stay on the sidelines.
You and I have talked about the markets for a long time, and over the last couple of days, Portugal came back into the news. One bank, Espírito Santo, I think.
Well, it spooked. I mean, of course, they were one of the peripheral countries, Portugal, and many people said these are one of the ones that make
Portugal,
up
Ireland, Greece, and Spain.
Yeah, the pigs. So they were going to be the ones that led the market down, and of course we had that. There's a backdrop of fairly weak economic growth in Europe, a couple disappointing data points, and then this bank comes down. It's been on a spiral since April. It fell 50%, and then yesterday it fell 17%, essentially over worries about some of its loan. Its parent's company is stuffed with Angolan, loans out there, and it had previously gotten in trouble and come up with, and been flagged for some of its loan portfolio and other things. So Clearly, this is a worry, and it kind of, you know, coupled with, hey, valuations come pretty far. Europe's still not fixed, and you know, we've skated on side because the ECB, the European Central Bank, has been willing to do virtually anything and pump stimulus into the Eurozone. But now, where are we? And so that spooked markets across the world. You saw quite a bit of change with, you know, Italy down 1.9%, and so market in Spain down 2%. So you saw that, and then a whole flight into safety. German bunds essentially rallied, treasuries rallied again. So gold. And so you're seeing all these knock-on effects. And I think the truth of the matter is Europe, no, isn't fixed. But I think it's getting a little bit better in general. And even if this bank goes down and went to zero, it still wouldn't have an overall impact on the global economy other than the fear factor in the short run.
Yeah. Oil? Why is oil continuing to go down, even though the Middle East is picking up?
Well, things in the Middle East look pretty uncertain. You've got Israel putting 33,000 reservists on standby, so that's certainly worrisome. But what has happened is Libya is starting to get back into the world market for many years now. After essentially the fall of Gaddafi, you see that 90% of the production was offline. So it's starting to come online, and that's about 1.5 million barrels a day. And so in a very tight oil market globally, that 1.5 million barrels starting to come back online is moving in the needle. The other thing that's happening is pipeline access in the U.S. is increasing and getting a little bit better. So that's helpful, so you don't have some of the bottlenecks in pipelines. And then thirdly, you know, you see U.S. oil production increasing. So it's sort of 8.5 right now, going to a little over 9 in the next couple of years. At least that's what people are forecasting. So I think you're starting to see a little bit more global growth. Of course, this is shale oil. So again, there's been sort of a mixed message in terms of, you know, the quality of the oil that's coming out of the ground and the ability to continue to generate production rates that continue to grow higher. Ultimately, it probably will top out at sort of the 8.5 to or 9-ish million barrels a day range in the U.S. But nonetheless, that's enough to keep prices lower.
Okay, we'll look forward to that. John, have a great weekend. I know you will have a good Friday afternoon.
I'm going to have an outstanding Friday afternoon.